Hello and welcome to this Embark Talk, following on from our Selling Our Business and topics that people might want to consider or look at. And the one we're talking about today is drawings versus PAYE. So what should you do? Well, in pretty classic fashion, it depends. It depends on the business, and in all honesty, it depends on the type of person you are, especially when it comes to money. So let's dive a little bit more into the question before we look at the pros and cons of both options, because there are pros and cons of each option. Why are you asking the question? And the key thing is, do you think one will give you a better tax answer than the other? If you've watched our secondary tax video, the answer is no. Generally speaking, the answer is no. Yes, there are some differences around timing. And that's what we'll go over the pros and cons. The key difference is timing and when that tax is going to be paid. But if you're on PAYE income of $50,000 and the salary allocated to you at the end of the year because you take drawings is $50,000, well then you pay the same amount of tax. It's that simple. Now some people are going to go, hey, well, I know a little bit about tax rates, and aren't individual tax rates higher than the company tax rate of 28%? You're right, they are. Anything above 48,000 in an individual's name is at 30, 33 or 39. So you're going to go, well, hold up, I'll leave everything in the company above 48,000. Well, you can't for a couple of reasons, but even if you could, if you want to spend that money personally, so if you want to spend it on personal items, paying off your personal mortgage, therefore we need to get that profit into your name, whether that's through PAYE, shareholder salary or dividends. So no matter how you cut the cake, it has to go into your personal name so you can eat it. So at some stage, it's going to be at your marginal tax rate. And that's why keeping everything in the company doesn't make sense. I know there'll be some people out there kind of going, well, hold up, what about a trust structure? You know, I've heard Bob at the pub, he said, I've done this and this worked for me. Once again, when we're doing this stuff, it's real general information. If you want to talk about specific situations about trust, they have a fair amount of cons as well, or additional cost to them. So any potential tax benefit you might get can get wiped out pretty quickly. And that's not why you should create that structure, it's for a tax benefit. But if you want to talk about that, reach out, drop us a line, we'll go over it with you. Because for your specific situation, it might work. But in most cases, let's keep it simple and just have it go into your own name. So, two big questions when it comes to wages versus PAYE is, how are you with cash and who are you in business with? So cash is a big one, and what you like with cash, because when we go into the pros and cons, when it comes to drawings, there is a delay in when that tax needs to be paid. But if you're no good at saving cash, then it's probably not a good option for you. If you're in business with your significant other, fantastic. We can slice and dice it whichever way we want through the allocation of salaries at the end of the year. If you're in business with third parties or friends or even extended family, then our recommendation would obviously be market value for everything. So market value salary, and the easiest way to do that is on PAYE. So let's jump into it. So shareholder salary / drawings. So the reason why I've got two names in there is if you take drawings, then you will be allocated a shareholder salary at the end of the year, and it's that shareholder salary that tax is paid on, not your actual drawings. These two numbers can be different. So transfer cash from business to personal as and when required. So that's your drawings. You can transfer the money from your business account to your personal account as and when you want, and that is simply done by your banking app. When it comes through into your Xero, then obviously we code it as drawings because you have taken it personally. You have to plan for tax. So since you're not on PAYE, you don't pay tax when you actually take the money. You pay it when the allocation is done, and likely you'll be paying it months after the fact. So therefore you've got to plan and actually put money aside for tax, so that when your accountant reaches out and says, hey look, you've got this tax bill coming up, you've got the information, you've got money there and you're ready to go. You will be a provisional taxpayer, so you'll be paying 3 or 4 times a year, generally speaking in August, January and May if you've got a March balance date, and then you'll have a wash up of your terminal tax at the end of the year, which is generally speaking due April the following year. You do not get any deductions in regards to your contribution to KiwiSaver, so all that needs to be done voluntarily. PAYE, so tax is paid as you go. It's as simple as that. So when you get paid your income, your salary, therefore it's taxed as you go, so there's nothing that you need to worry about from that point of view. So therefore, because everything's paid at that point in time, you know what you're getting, you're not taking money out from the business. It's very helpful with budgeting from a business and a personal point of view, because you know that X amount is going out and X amount is coming in, and I've already paid my tax. It's unlikely as an individual you will be a provisional taxpayer, because you're paying PAYE as you go. To be a provisional taxpayer, you must have other things going on. That doesn't mean the company won't be a provisional taxpayer. So potentially if your company has significant profits, then it will still have to pay tax on these profits. So it may be a provisional taxpayer, but if you're leaving that cash in the company, it should be available at that point in time. So there might be a little bit of tax paying that you need to do from that point of view. A payroll system is required, or we strongly recommend one, and you look at our payroll video from that point of view. We're very hot on streamlining your admin process, and the best way to do that in regards to payroll is to have a system there so it's taking off all the different boxes. So there is a bit of cost that is required for that. You're talking $500 to $800 a year to cover that off, but if it means that you budget, you tick all those boxes, and you're happy with that, it's worth it. I haven't mentioned there, but KiwiSaver, if you're paying yourself KiwiSaver through PAYE, it's generally speaking a deduction, as it would be for your employees, that 3% employee contribution. So there is a little tax advantage from that point of view. So, starting a business, choice versus PAYE. I'm sorry if you're watching this to get some magical answer, but there isn't one. Honestly, there is no right or wrong answer. It's solely based on your situation, and I would highly recommend you talk to your accountant, not John the pub, to work out the best solution for you. And it might be just in terms of the seasonality of your business and its cash flow that drawing makes more sense, or it might be because of your situation that you want to take PAYE wages so that you know exactly what's going on. So have a chat, talk through some options. If you want to reach out and talk about this more, feel free. Let us know. I'm more than happy to chat. Thank you.